You still have the option. This candle will continue driving down. Little pullback to none. If the momentum is there, this candle should be able to break its own low now.
I
But the pullback that makes sense here is no more than the 20. I note that kind of the stop loss that you had to be conservative is pretty tight. So I'm watching my chart on the on FX, right? But the pullback, let me show you the pullback that makes sense as right now for you guys is technically this area here, the 20. Is that the 27? No,
this
and
previous
price
range.
continue driving down. That's what makes sense because you still have the option to target the low of this candle here. For me, this is a confirmation of support candle. Most of the times when price push, create a resistance, you're good to go. This candle created a beautiful retest to the previous breakout. So now you have enough fuel to fill this whole range over here toward this area. Here is roughly, I don't know, 40 pips on my terminal more than likely. I don't know for the on your terminal.
Yeah, no, I honestly, I agree with what you're saying, and having the previous 4 hour close heavily bearish here for us, right?
Yeah.
We are bearish. We want to come down. We want to look for sells. The issue is, oh, why are we frozen? The issue is once we start coming down here, right?
Yeah.
And I see this 5 doesn't have much of a top wick. As we start pulling back, I understand that it can create one, and there's range here in terms of this wick. So as it flips, it can fill that wick. So once we start filling any kind of level to the left, I typically go break even.
Oh, okay.
Right? But
yeah,
and especially with this closure. So how we interpret closures like this, right? Anything that closes with no wick, we interpret as no range.
Oh, okay.
That's how we say,
yeah, like
oh,
it's
there's
hard.
no wick, so we say, all right, there's no more range to go, because wicks, if wicks are ranges and there's really no wick there, there's not much range to go, right? That's why buys here made sense after making that bottom wick, because we understand there's no range and you're at a support. That candle needs to kind of retest a large portion of the previous one.
Yeah,
that's what happened. And see how there's no wick here on the closure of that candle? And there's no more range, so that's why we were looking for sells instead of the continuation back up into range. But once this wick is created on the following candle, we see that as range created, and it's a possibility it can still get filled up. It's just we have bearish momentum.
So look at the timing in the chart. You don't have timing on your bar. Oh yes, you have.
Right
you see that there's a 2 minutes and 17, whatever, 2 minutes 10 seconds, whatever.
Yeah.
You want to see that continuation when the momentum is there. You want to see that candle in the last 2 minutes instead of rejecting, creating a brand new low, and that's how you know the momentum's still strong to the downside. And if the candle is not a bottom wick, if the candle has a long wick, in total honesty, when the momentum is there, doesn't mean anything other than its lack of momentum, lack of volume. But most of the time, especially if you look at the 5-minute candles, a 5-minute candle is gonna leave a long ass wick. I'm sorry, I don't know if I can say.
Yeah, you can say whatever you want. Anything you
but
want.
most of the times, let me show you. Let me show you here. When you pull up the 5-minute candles, right?
Yeah.
Most of the times, based on my experience, where's the notation again? Oh, this is the notation. Okay. So most of the times, what will happen here is this candle create a long ass wick from the downside, lack of momentum, maybe trading the last 15 minutes of the hourly candle, but immediately the candle that continues on the next candle is gonna create the same behavior as the previous one, little to no top wick, and the wick fill happens in the first 1 minute. Another candle, another candle that is leaving a wick to the downside is this candle. Anybody that can see this candle say, "Oh fuck, it's rejecting." No, but it's a valid reaction until price break the high. If not, that's just lack of momentum. What happened in this candle here? Another candle that is leaving range to trade. New candle, little to no bottom wick, top wick, and the continuation still heavy. Now, when price is approaching your level, the 21, that level for me. In 1 second, that level, your 21 is technically my 13 level on Forex. But based on my experience, that 13 level is a monster area of contention. When you look at the weeklies, when you look at the 4 hours, dailies, in your case, the 4 hours going to look a little bit different.
Yeah. But the daily, more or less.
But when you look at that level in terms of price action, man, that freaking level, that 13K, the 21 that you have there, let's say the 20, the round number, it's going to be a nasty area of reaction. So when price is approaching those levels, you say, oh shit, this is pretty much it for me. And I'm going to cash out here and I'm going to call it a trade, right? Like, for example, look what price did right now in that massive 5-minute candle. If you measure that 5-minute candle, let me see how many pips do I have here. It's probably like 40 pips in volume. 40 pips
on the dot.
Exactly. So that's the one that you needed when you enter the trade. I know that you're playing more conservative in this to an extent to protect the account, which is or business. The trader's business is protect your account. Protect your account. If the momentum is there, you're gonna get paid really nice and easy. Now, when you're having a good day, when you're having a previous winning trade, most of the times you can be a little bit more greedy, let's say, and say, "Oh man, I know this setup. I know the price can make it to the confirmation of support because this candle for me is my confirmation of support, for example." And I'll say, yeah, for sure, I can consider, right? I can consider to target this low right here. Oh, price is rejecting that low and leaving a long as wick. That's okay. If not, candle will try to pull back in the first 1 minute, second 1 minute break, and the momentum is there because the momentum, this is your momentum. Yeah, it's just that when prices reach in certain levels, they tend to create either range, nonsense behavior, and then you get punished, left and right. But apart from that, no, man. The trade you considered was pretty good, pretty decent trade. Sadly, the pullbacks can be too dangerous on gold.
Yeah, they can be brutal. They can be very unforgiving on gold. Yeah. Gold can be a very unforgiving pair.
Yeah. So from now on. Excuse me. So from now on, for example, if the momentum continues, all you need to watch is 30-minute candles tend to be more aggressive in pullback. The maximum pullback at this point, what can be? The maximum pullback can be any key level or any confirmation resistance high. Let me see the 5-minute candles that you have here. So technically, the maximum pullback is this candle high. From there, another setup. The candle can push in 1 minute and one 5-minute candle. Another 5 minutes gonna leave a reaction and a new candle will continue driving down. That's when you see that kind of momentum, it's way easy to trade. But like I said, the tricky situation here is the level itself. That 21 that you marked in there, that's technically my 13 level. And I know that 13, that the target, like the confirmation support low, that was it. That target was pretty good. It's 40 pips. Technically, where you enter is technically 40 pips down.
So you wouldn't move stops to break even until you're either breaking or tapping this level, or you're breaking.
No,
your
look,
high.
The way that I'll try to do something there, let's say, is gonna be like the entry you got was really good. In sense of that you're waiting for the top wick to be established. Yeah. That's a beautiful entry. So what I will do is try to try to enter at the break of that low. I'm gonna be risking probably the high of that candle first, but as soon as price is closing, is leaving this high, I'm gonna use the stop loss on the high of this candle. The first 1 minute, when you pull up the 1 minute, and let me see where is the first 1 minute after. You can do bar replay in here or no?
Yeah, you can do. Oh, not on this one. Yeah, I can go.
Not on that one, no. No. Okay. Go bar replay on the 5 minutes, and on the 5 minutes. And check what happened as soon as this candle closed. That is so replay.
It won't on that candle. We can go by 1 minute intervals. Oh, so what?
Okay. That's all right. No worries.
We have premium. Hold on. We got premium. I think we haven't been logged in here for forever because we're trading on this.
But but don't worry. Just keep an eye on what happened at the close on that last 5 minutes, on the 5-minute candle that closed, the one that you entered. Your entry was somewhere here, no?
The entry was the flip here on the 15, so right there.
The 28. Let's say 28.
Right there.
And do you remember what time that happened?
Yeah, that's off the opening of the 15-minute candle. So that was 10:16, 10:17.
Okay. Yeah, because overall, I'm gonna wait for that candle to close. This that bullish candle. I need a resistance. I need a reaction. Let's say if I don't have the resistance, I need a reaction. So what I will consider is what is the information here. on that candle reacting. Before I pull the trigger at the break of that low, I'm gonna need a certain resistance being established near to that kilo, near to that 28, 29, 30, whatever you have there. So what I will try to do is, instead of me entering at the flip of the candle just because the candle created the top wick, I'll wait for that candle closing. I'm gonna wait for 1 minute candle at least that can give me either a support that a new candle respect the high and break the low, and my entry is gonna be this one, not the flip. So at that point, instead of me, right, risking the entire high of this candle,
it's going to be the current candle.
It's going to be the current candle high.
Yeah.
Correct. I have information in this candle here that is going to be black or white. It's going to tell this resistance is valid and this resistance need to continue. Last 2 minutes, continue. And the next candle will have to do the same. If I have momentum, the first 1 minute candle of the next 5 is going to be a resistance. And the second 1 minute is going to break that resistance candle low and continue driving to my target. This is my target.
At some point, yeah, at some point you realize that it's holding, or at some point you realize that this is the candle that's going to let you know it's going up or down. This is the candle that's going to show that reaction.
Mm-hmm.
Yeah, it's very interesting.
Yeah, but you know, we all see price action in a different way. It's just that the way that I do it is a little bit more conservative in the sense that I need more information. When I'm telling you, if you put these things on a simulation tool, it's easy. Like the easiest one in here was when they finally, after multiple reactions happen, the kind of the one that makes sense was to take the break of this candle low. Plain and simple. And after that, momentum.
Let me ask you a question. So you're not waiting for this closure below the range here?
No. You don't need a close below the range, because what you need is, where is the high volume candle? This candle here, that NYSE, that 9:30 a.m., that's my high volume candle. It's the same as the COMEX open. Multiple times you're going to have a COMEX that is closing bullish, but the next candle is not breaking the COMEX high, so therefore you cannot look for buys until price finally close above the COMEX. The commodity exchange open. For the ones that don't know what COMEX means, is commodity exchange open. So at 8:20, that candle closed on my 5 minutes 25, and from there, if there's news in the market, avoid trading the COMEX close. Why? Because COMEX can close bullish, and you may have the picture clean for a possible move, let's say, to the upside, but the new candle will try to tease you and
you had unemployment claims right after
and
today.
Then go the opposite way, go downtown before a brand new close happen, and then that breakout is the one that you want to consider after the news has been released, because multiple times the news is just noise in the market. So the same happened in this area here.
Right
that
there,
huge reaction candle is a hell of a volume, right? The one that isn't, because you have to understand this. Can you squeeze the chart a little bit more to the upside? Yes, correct. Yeah. So here's the thing. These are not my drawings, no?
No, that's me.
No. Okay. So here's the thing. Give me 1 second. Let me get a tiny one. So we need to know what happened there. How you avoid, like being stopped out, or you have FOMO, whatever. Wait until a body close below this area. Where is your COMEX volume? This is your COMEX volume. Somewhere there. There's a little pause in the market. What happened with the news? Just retesting the COMEX low, closing bullish. What is the bullish close? This one. This candle here is telling you, hey, buys make sense, at least to retest that confirmation resistance high, or to retest the major kilo. Here on that zone over here, I have a 33.30. This is a master kilo. 33.30 is like trading at the 33.50, trading at the 33 flat, let's say. It's a monster. Exactly. And price on the higher time frame tends to go there just to pick more liquidity, to pick more volume, to get more orders into the market. Now, when there's heavy candles driving up, like this candle here, you don't need to be counter trending the 30. You don't need to be counter trending that zone. But on a daily basis, if Asian session push, a London session push, and NY push, like the 3 sessions in a row retesting that area, the moment you have a bullish close outside that area, that shit is gonna fly, because it's gonna release the volume from the 2 previous sessions. Today, with that kind of news, was fishy as hell, man. Like this huge candle here, as soon as the 4-hour candle opens, it was fishy. But why price never gave it a go about the candle that injected
closed,
the most healthy volume, right? Nothing. Oh, what's the difference on this candle here? Oh, it's a massive candle. It's deleting this information and it's deleting this information from NYSE. So once you have that information, you say, "Fuck it, man, I'm gonna just go for it," you know. So and pray for the best.
So then, what are you looking for in terms of stops? Let's say you get this closure. This stop is all the way up here.
Any key level, like for in my terminal, let me see the 5-minute candle here on my terminal. I'm gonna tell you what is that level, the opening of NYSE.
Because I understand you had the NYSE open the low that pushed us up. The volume pushed us up, but then we break that NYSE open low, and I understand this. And now at this point, we're coming down. You know, actually today when we were here, I said we're gonna drop here another 30-40 pips, and. You know,
it was madness. I don't know if you're in your terminal. And my terminal was mad volume, like 1 minute going up and down.
I think that's on the forex side. The future side is a bit more calm. It doesn't. The candles don't twitch like they do in forex. They're a little. They're smoother printing.
That's good. That's good.
Yeah, you don't get a lot of this. You'll do in volume time, and you'll see it twitch, and then you kind of know the direction it's going to.
Yeah, but most of the times when the momentum is there, for example, what is the stuff that need to happen for you if you're gonna enter, let's say, at the break of that candle low? All you need is a little pause in the market, 1 minute, and then take the second 1 minute break. You can enter aggressive
on the 1 minute
as market
right here.
Yeah,
sorry.
Yeah, no worries. If the momentum is there, the 1 minute candle is gonna be the driver for the
yeah
session.
This would have been the closure here.
That's the closure. So technically, your entry can be the low of that candle there after the 1 minute close, and the stop loss is gonna be the top of that candle. Now, if you're gonna be aggressive, like the price leaving ASAP, the price is leaving that low, and you don't wait for that 1 minute to close, it's a hit or miss, because sometimes that 1 minute, so much volume, that 1 minute can give you 40, 50 pips in volume in one shot. And then you say, oh shit, yeah, I already missed the entry, right? So some people tend to be more aggressive, and they're gonna be breaking the low of that candle there. They have enough information. They're gonna need to use the high of that candle as your stop loss. Why? Because this is the candle that is giving the information in the little tiny time frames, saying, hey, I'm here. I have volume, bitches, so you better move out from my way.
Are you not afraid? Are you not worried about the 13 level, like you said, 33, 13?
Yeah, but the 13 levels is somewhere there.
I'm sorry. You're not worried, but you don't have a level here as you're coming down.
No, I don't have a level. Technically, my level there was 18 level. There was an 18 level holding here. This is my 18 level. Yeah. Yeah, but at that point, no, because the target is most of the times the 4-hour candle low was sitting below this area in that zone. That was technically the 4-hour. That was it was this candle. I don't exactly remember on the but this is the future chart. Yeah. The one that I had is let me see. Let me check the the zone. Right, the zone that I have here for the. Can you pull up the 5-minute candles?
Yep.
Thank you. The zone that I have for the 4-hour candle low is technically this area here. This area. Mm-hmm. This area. So what is the stuff that I look on a daily basis? Below that candle there to target from this area here, 50. 75 and 125 100 or 125 pips to the downside. What is the stuff that I need? It's a one silly bearish close, a body, something that never happened before. A body closing, a pullback, and the breakout, and I'll be okay for that breakout. Give me 1 second. Let me bring a red color here. So what is the stuff that I need? This is right there. This is my 4-hour last bodies on the 4-hour. This candle here is telling me, hey, I'm here. I already closed bearish. So what I need is a 1 minute pullback and the second 1 minute breaking. If that's there, I'm going to start measuring from that low of that 4-hour candle, from that previous structure that closed near to the 5 a.m., which is the 4-hour close for me. Yep, right. Then I'll look for 50 pips, 75, or even 100. So what is the candle that gave me that information? And what is the candle that didn't manage to break that low? The candle that gave me the information is this candle here. It's a beautiful close. But then this candle is not giving me the pullback and the breakout. What is, right? from this area here. Give me 1 second again. Bear with me. This candle here, right? From that low. What is the candle that technically closed bearish below that area there? This candle here. So I know this candle is giving me a beautiful signal to continue trading below this low for 50, 75, or even 100 pips. Measure once this candle closed, right? If you could have entered as breakout trader here for the week fill, if you didn't manage to enter on the week fill on the first 1 minute there, measure how many pips you have here to the last rejection there.
It's about 90 pips.
It's roughly 90 plus, no?
Yeah, 90 pips, 91.
Yeah, maybe here because you don't have the spread and shit. That's why. But if I measure my chart, it's probably gonna give me like 95 plus. I mean, the algorithms are kind of specific. You can blame, on my terminal that low is 97 pips.
But so it's more or less the way it moves, actually. The price might be off, but the way it moves is pretty much the same. It's very similar.
Pretty much the same. And when you look at the CFD chart, which is the Forex chart, the level that got rejected is the 3310. I know future, I don't want to confuse you. I don't want anybody here, to get overwhelmed because of the level, because of the candle, whatever. Just when you map out your chart with the CFD, with the Forex chart, you tend to collect more data, like reliable information. You have the trading view chart, no?
Yeah.
Check the trading view chart and see how every $10 move on gold behave. That's your CFD. Yep. Look what happened. Look what happened on that candle at the high, at the very top of the session. Up north. Yeah, right there. Grab the 30. Place a line on the 30. 3330.
Oh,
yeah, 3330. Yeah, 3330. It's like millimetrical, man. Look at that. If price is gonna leave the key level, if price is leaving the key level, price will need to break back in last year. They're gonna need to break 15 pips above the 3330, let's say 31.5. Yeah. Nowadays, volatility is higher, so they need to clear the 20 pips above the key level, which is the 32. If not, that key level can hold and hold and hold and hold. Now, go to the downside and see how nasty the range of 200 pips can be, and let me know what is the low of the day today. For example, on the CFD chart,
3310.
Jeez. Why do you think price love doing that shit, going from round numbers? But this is information that if you're just watching the GC1, which is the future chart, you're gonna miss a bunch of information. For me, Forex is legit. The chart on Forex is legit, bro. And every time the price push is gonna go either to 10 pips to the key level, to the 30, in this case, price went to the 20. The previous reaction. This one.
Yeah, we have 3340, 3320 here.
It's always like $10 most of the times. Unless it's the last day of the month, tend to be a little bit more or sometimes less. But most of the times, what you're gonna have is price pulling back to round numbers, and you can be all aggressive you want, and all you need is to risk 20 pips on top of that kilo. Like if price is leaving the 32, get out of that thing. Don't hold that position. But most of the times price will go to the 33.30 and reject. In my case, this 30 is the 20.
Yeah.
So I know the price need to break the 20, the 33.22, and then I avoid feeding the market and say, oh no, fuck, I took a trade from the 33.29 in this case, 29.5. I was risking the 32. And price is not respecting 25 pips, more than enough, and that's being aggressive. But most of the times, price will behave in waves, and they're gonna go for this kind of behavior. They're gonna go either to the key level, reject less than nowadays it's 20 pips above the key level or below. So price can literally go to the 10, break a little bit more, but need to respect the 33.18. As soon as price is closing bullish, you go for it. Oh, price is pushing to the 20, you play the range like a king, and then boom, to the downside we go, and all you need to risk is 20 pips on that area. But depending the time in the session, can be easy, sometimes can be tough, and you don't want to be, messing around. Like, keep doing your thing. Just, as a friendly advice, always keep an eye on the round numbers, what the market can give you at around the near to the round numbers. Most of the time, something that I don't recommend, but I do a lot, is like if I have a 4-hour candle, right? If the daily, most of the times, if the daily is bullish, right? My daily is bullish. I have the previous daily bullish, the current daily is bullish, right? Let's say this is our daily candle.
This is what looking we have right now. Just on the bottom week.
So exactly. So most of the times, this is your Asian session. That's the daily low. Most of the times, London is gonna create a bearish close, a pause in the market. Measure what you have here on the London low and try to look for buys 75 pips below that London low. If you manage to catch a knife with bare hands 75 pips below that London low, all you need to risk is 25, because very rare that London's going to deliver more than 100 pips. When the momentum is there, that's okay. But market will create a little bit of circle, a little bit of a circle, a little bit of a circle, a little bit of a circle.
Down
when price is going in one single shot, most of the times what price will try to do is to go for the London low. The daily is still looking bullish. They're going to try to retest the Asian session low or even fake out the daily low by 20 pips or less, sometimes 13, sometimes 20. And then reverse. If this is your London low, your London 4-hour, and price deliver 75 pips, you can always try to be the hero of the session, buying 75, risking 25. And from there, you look for reversal of 100 pips.
Interesting.
Yeah, it's a hell of a...
Because it's a lot of it is really, it's what we do is just how we look at it perspective-wise, right? We see it differently, but we do a lot of same things or similar things. And in terms of identifying volume and identifying the levels.
I was thinking about that earlier, Wix.
It's
y'all do the same thing, but you're doing it on ranges. If you look at the board, everything he explaining is the same thing that you wait for, and with your strategy on the top range and the bottom range, identical. But he's just explaining it dissectively.
It's just very similar. It's very similar in terms of because we're all just doing price action. We're all just reading candles, right? And we're all see the same thing. It's just we see a different shot, like we had earlier, the example of when you look at a reflection or a shadow of a cylinder on a wall, it really depends from what angle you're looking at that shadow, because that could be a square on one wall, but if that light is shining from a different angle, that could be a circle on the wall, right? So we're seeing the same thing. We're seeing the same cylinder, it's just the way our perspective, where we're standing based on the shadow, that's the only thing that differs. But we all see the same thing. The market's printing the same thing for all of us, for the same candles, and it's just where we find the edge, where we interpret the edge. But this is it's really helpful seeing where somebody else sees an edge, because it's not an opportunity or a place on the chart that my eyesight would have locked in on, right? But hearing things like this, you tend to then you start watching for things, right? You don't know how many red cars you saw today, but if you know you're looking for a red car, you'll start counting how many red cars you see on the road. Same thing here. We don't know how many opportunities we missed because we haven't looked for them. But if we have a perspective that shows us, opportunities in different places, now you can look for those opportunities, right? Because you know where they are. You've been that perspective has been opened for you. So that's pretty dope, Kerwin.
And most of the time, market is repetition. So once you spot a certain move, you're familiar with it. Man, it's gonna be easy for you to dissect that candle next time. So you're gonna say, "Oh, I've seen this move before. Oh, I know what's gonna happen." It's like when price during news on candle, they show up with good numbers, bad numbers, but it's against the bigger picture. What happened is that most of the times price will go 75, 100 pip max from the news release, and immediately you have a reaction. If it's against the bigger picture, if it's against the real technical fundamentals, is just noise in the market, in total honesty. Most of the times they use to manipulate people's minds and say, "Oh my God, the news are good, so I'm gonna."
I agree. Nothing can happen without the candle printing here, no matter what the fundamentals say.
Exactly. And most of the times, before the news are coming in play, you're gonna have a 4-hour candle telling the story. You're gonna have a daily candle telling the story, so you know what to look for.
And that's what we say. The news will typically fall in line with price action. If you have price action that's telling you a story beforehand, the news will typically fall in line with the story.
Yeah.
I had a question for you. I see you take news trades as it's pushing, and you'll have, let's say we have new, right, FOMC, and I see you have a buy limit here and a stop right below the candle. Can you go walk us through your mindset of what you're looking at when you're doing that?
What I just told you, like I'm gonna
only
measure
off the daily level that you're looking at? Are you looking at the support? What are you looking at?
It depends on what I have on the 4-hour candles, but most of the time, let's say news are being released now, right? Yeah. Now in this case, fish is very dangerous because the daily is still okay for a possible continuation up. But what I'll do is when the news are coming, I'm gonna look into the last confirmation of support low, like this candle here. If it's a key level, if this candle aligns really good, that I'm gonna have like 80 pips, 100 pips from this opening of the news, I'm gonna take this entry and I'm gonna risk the last low of a candle that already closed about the round number. In this case, we have a 33.15. So what is the candle that closed above the 33.15? More than likely this candle maybe. So I'm gonna take the entry on this area here on that confirmation support, and I'm gonna risk the low of that candle there. If this align with 100 pips for the news and my daily, I'm trying to become buying the wick of a daily, because remember the daily can go up and down, up and down. What I'm trying to catch is the lowest point of that wick of that daily candle, so I can go for that continuation up, and at the end of the day, I can be 200, 300 pips on a runner. And don't get me wrong, you probably see the fucking stories of the way that I take the trade. Yes, the stop loss is small, but when you see 200, 300 pips and runner, it doesn't mean that I'm holding entire position. No, I close one position. If I enter with, let's say, 2 positions, I'm gonna close one at 1-1, and the other one is just a win. Now, what if I enter with just one single position? What I'll do is I'm risking maybe 30 pips. I see price going 60 pips. I'm gonna close 75%. I'm gonna click the magic keys or manually, whatever the case is. I'm going to click twice, close half, and I'm done. And I'm going to move the stop loss pretty tight. So that little runner, let's say 25% of the position, that little runner can go 200, can go 100. It depends. As soon as I see the price is not going my way, I'm going to close the runner. I'm not going to leave the runner, being hit on a stop loss or BE or whatever. Immediately, I'll move the stop loss to inside profits most of the times.
What if the daily was bearish? Would you still look for a buy here? Down here?
No. If the daily is bearish, I'll do the opposite. If the daily,
So where would you have a buy limit here? If the round,
let's say
all the way up at 33.40, because I don't think the news would hit there.
No. Where price retested this area here. Show me the 5-minute candles.
Yep.
I'm gonna look for the candle that created the most healthy information. This candle here, for example, that's my confirmation or resistance. This is my key low, and this is my breakout from the London from the NYSE session. So if price is trading near this area here, I have a bearish daily, right? That is driving like this. So far, that daily is looking like this. So what I will try to do is like that daily push into this area here. That's gonna be my entry point, and I'm gonna try to squeeze the most I can that volume. If I have the entry plan for that body, most of the times you can plan an entry at the body, or you can plan an entry on a top wick of a previous high volume candle. Like in this case, the high volume candle that we had before was this candle here. That's your COMEX candle, right? This is your 820, no? This candle here.
So you wouldn't look at this candle coming down here heavy? Right here?
I will look to that candle going down heavy. I'll look into this candle here, the COMEX volume, the commodity exchange open, right? If it's 10 a.m., let's say, I'll consider to take a sell from that area there. If price is trading on top of this area, the daily is still bearish or the structure is bearish, I'll try to sell the high of NYSE, the high of that candle there. And I'm going to risk the confirmation resistance high. Why? Because this candle here, most of the times, if you go back in time, most of the times the structure is, let's say, the structure is bearish, right? the structure is bearish, everything is looking Gucci. NYSE can create a bullish close. And what is the stuff they're going to try to do? They're going to try to induce people to go for buys as breakout traders there, not knowing what the bigger picture is saying. Immediately, you're going to have a fake out from the candle and a new candle that create a resistance. Once you get the close below this area here, you know that this volume is being released. And if you have any structure sitting to the left-hand side, that's your target below that structure there.
So
can happen in 5 minutes, can happen 10, 15, 20, 30. Only the market will tell, when the volume is going to kick in.
So if we have news coming in right now and we have a bearish daily and we see this all of a sudden start pumping up, right? We see a heavy drive up, right? We see this happen. Are you looking for a sell limit at this area, 3330 area?
If this area here.
And a stop here, roughly?
No, you don't need a big stop loss there. If it's gonna pay, it's gonna pay like this. This may be your entry. If from here to that zone is 100 pips, let's say, you can always sell limit, or you can always have the option to leave market alone, push, and try to sell the last 2 minutes of the candle, of the news candle. If market already created some sort of a upside structure, like what you see here.
Yeah.
See how this low was established? Yeah. Now you have a brand new low. So if price is creating this kind of push, you don't want to be in front of that train so easily, because this can be a brand new extension to continue pushing and then create a new high, and now you have a brand new low. And then price, you're gonna be trading counter trend to create a new low before market continue. So in that case, what you can do at the news is, where is 100 pips from the news opening? If this is my, let's say 34, and this is my 34, I'm not gonna use this high over here as my entry. I'm gonna try to enter at the 100 pips from the news opening. Always, you can go 100, you can go 80. The less entry you have, let's say if you enter at the 70, at the 75 with some sort of FOMO, that means that you're gonna need to start showing your underwear more than likely, because price can go, activate your order, and price pull back a little bit and create a brand new 1 minute support and then continuation. And then as soon as that happens, you need to understand, oh, fuck, I got in here, price already pulled back, but that create that 1 minute support that was established. I'm going to move my stop loss to the high of the candle, no matter if I was risking 20, 30, 40, 50. I'm going to use the high of the candle as my stop loss, because the moment you have a 5 minute candle, let's say it's closing like this, no matter, that candle can close even like this, right? Yeah. Can close like this. But as soon as that candle gives you a brand new 1 minute support, and that 1 minute support is not being respected, that shit can give you entire wick fill to the upside. And if you enter here and you manage to get 20, 40, 50 pips down, your best bet is keep an eye on what the lower time frames can give you. As soon as you see this 1 minute candle here, you say, oh shit, I got in there. Yeah, I got in there. I got in here. Price, instead of giving me after that reaction, overall what you want to see, instead of a bullish candle creating support, what you want to see is the opposite, because when the reaction is valid, what you're going to see here is a plain and simple. Exactly. A candle that may induce, retest a little bit, immediately create a bearish close, if not leaving the low in one shot, but you're going to create a resistance and then a new candle there, and boom, to the downside we go in the lower time frame. But what happened if, instead of having this resistance being established there after the massive reaction, you have a bullish close? Oh shit, if you have a bullish close, then it's the opposite. Yeah. The weak fill is what makes sense. It's the same thing that happened this morning in this area here. When market was selling off, the candle creates a reaction, but a sap create the reaction in the last 2 minutes. If you go on the candle in the last 2 minutes, what created that thing. It's the worst thing, worst timing, for example, to be breakout trader with FOMO is, oh man, it's leaving the support, but this candle is reading the minute number 3 and number 4 left. 3 and 4, 2 minutes left is when that reaction is going to happen. Why? Because market loves doing that. So most of the times we'll create two bullish candles. When the momentum is there, you're going to have what you're going to have there is two bullish candles, support, confirmation support, and this is the closing of the 5. But the 5, more than likely, let's say, is closing like this. And with momentum, we could fill. So what's going to happen here is a new candle, no matter what, is going to open with little to no top wick, especially if the previous 5 closed with no top wick. Then you're going to have here is a plain and simple 1 minute candle that with momentum we can fill in 1 minute. 1 minute candle can eat 2 minutes.
Are you just would you open a position right on the closure, or are you waiting for the first 1 minute?
Yes, I can. If I have prior that move, I have this kind of healthy volume, I can do it here.
I
can do it.
You don't even wait for the top wick on the next candle.
No,
because it might not give you one. It'll just look like
may not give you one, because if the bearish pressure is there, price has no business to break the high of the candle there. Immediately, what you get is the first 1 minute, the wick fill, and the next candle is gonna replicate the same volume. Little to no top wick, and you can go for the wick fill.
Interesting.
So it's a hell of a business if the momentum dies. All out of the blue, if the momentum dies because you're trading at the pretty heavy area of support, or you're trading to a pretty heavy level of contention, heavy level of support, or heavy level of resistance, you may suffer a little bit. But it's gonna be like this: you either get paid or nothing. Like if you measure that wick to the downside from this to here, you can get in 1 minute, you can be 25 pips and be done with that shit. Yeah. So most of the times, look, that candle there, 35 pips, no? Now pull up, go there and that candle, and look what happened at the that candle open. At what time that candle opened? The next candle, the wick fill. That was the 45, so the 50. Check the candle number, the candle 50, 950 to 951, and measure that candle there. It's gonna eat the entire 30 pips in one single 1 minute. That candle there, that's the opening.
30 pips.
Yeah, that candle. It's insane, but the momentum is there, and you're playing with the momentum. When momentum is there, we can feel like in the first 1 minute. And if you look at the next candle, where is the next 5? The next 5 is probably this one, right?
Right there.
If you measure that candle is gonna eat that wick fill in no time as well, because the momentum is heavy. Yeah, and this is
2 minutes. First 2 minutes of the candle.
Yeah, and since this is price action, the same thing that you have here, a support, confirmation of support, and the candle respecting the high, the same scenario you're gonna have later on, and the same scenario you're gonna find in the 5 minute candles. 2 5 minutes when the momentum is heavy, you're gonna find 2 5 minutes pushing, and in the next 5 minutes gonna eat everything. Like in here, for example, in this area here. Give me 1 second. Where is the notation again? Yes. So in this area, for example, you have this is your last low. That's a confirmation support. What's gonna happen is you're gonna have 1 5 minute, another 5 minute, and price is still managing to retest the confirmation of support or the support candle low, and the momentum can continue. Like people can easily get this to be breakout traders here. Immediately you have another close. Immediately you have another bearish close, and price is creating range before the flush. But this is with momentum. Don't try this. As in session is fishy as hell. As in session, you don't need to be trading 5 minutes or not even 15 minutes so easily on as in session. As in session, kind of the easy one is on Wednesday afternoon, the one that opened like last night. You know that Forex brokers, they pay you if you're holding buys on a Wednesday session,
they pay
to the Thursday session,
triple.
You have to pay like 10 times more swap. So if you're holding a one standard, right, a runner, one buy, one standard, instead of you paying $7, you're gonna be paying $70 in swap fee. If you're selling, then they're gonna pay you $70 in swap fee. It's the opposite. But most of the times, if you look into Wednesday candles, most of the times the Wednesday candle is start with reversal, and as soon as market open, they're gonna deliver 100 pips to the upside. Because if you wanna see that 100 pip playing out, you need to pay a big ass swap fee. It's not so simple. Advice that I give everybody is like if you're holding sales on a Wednesday, yes, you're gonna get paid, right? You're holding sales on a Wednesday session. Don't hold it. Don't hold it unless you have a pretty decent entry, because most of the times they're gonna pay you the 10 times the swap fee. They're gonna give you, let's say, $70, but that $70 is not gonna be compared to the drag down you're gonna see, because price is gonna go against you.
The gap that you're gonna see on open.
Yeah, Yeah. So it's insane. So it's really insane to see the algorithms play out.
Especially when you know what you're paying attention to, and it does exactly what you're looking for over and over and over. It's like, all right, is it magic?
Yeah. It's not magic.
So I had a question. Last question. So
Yeah.
on a bearish day, if that news didn't pump up, it pumped straight down. You're not looking for this reversal here, right? You're just looking for news to play out. Are you trading
To
with
play.
news?
Yeah, with news. Most of the times, this is a beautiful question because most people don't see this like so easily in the market. Let's say you are in a bearish day. Let's say the news and technicals and fundamentals are there.
Yeah.
So most of the times, news are gonna create this. You wait either the first 1 minute is gonna create a massive drop, and the second 1 minute will try to retest the news open, fuel again, and let's go downtown from there. So you have the option to be aggressive, leave the 1 minute alone. Once that 1 minute close, and if you see a pullback happening to the opening of the news, institutions don't trade news. Nobody trading news at that point. So it's more like the orders are getting filled after the news are being released. So most of the times you can enter here, and have like at least 10 pips on stop loss on the news candle high, and you're looking for that continuation. If the news happen in the direction of the technicals, now most of the times price will do something like this, for example, news, and you say, oh man, the closing, let me show you here. The close is good, it's strong, it's leaving, let's say, no range to trade to the downside. What do you need there? A brand new 1 minute that create the resistance and be breakout trader below that 1 minute. Aim for the wick on that candle there and continuation. And with momentum, you're gonna see that after the news, every 5 minute candle is gonna create the same.
We technically should not re-break the first 1 minute high, right?
The first 1 minute, as long as 1 minute close bearish. Yeah. You can always be breakout trader below that 1 minute. And a stop loss, if a stop loss is 3 pips, it's 3 pips is stop loss. If the stop loss is 5, it's 5 pips. If the stop loss is 7, it's 7. Now, don't risk 1% of your account risking 3 pips because even the spread can take you out,
Yeah.
But the idea is that you're gonna get rewarded really easy. But after news, it's easy. News close, little 1 minute resistance or whatever. If the 1 minute creates some sort of resistance there. If not, if prior to the news you had healthy bearish candles with little to no top wicks, then you can enter aggressive as soon as the candle opens and have a pretty decent stop loss on the last 1 minute that created that bearish close.
Interesting.
It's aggressive, don't get me wrong. That said, you need to see that multiple times before you try something.
Yeah, it's logical though. Like when you're explaining, there's logic behind it. If it makes sense, typically in the long term, it makes dollars as well.
Yeah. So
awesome.
Yeah, man.
Awesome. Thank you, Kerwin. This is very enlightening.
My pleasure, brother.
There's a whole. I'm sure the chat has a lot of questions. I had a whole bunch of questions, but like the main ones, and really like I wanted to really hear your perspective on news and on key levels and on your on the reels that you post. Right, I see the reels that you post, and I see this position happen all the time for the news. And those are my questions. So I really appreciate you hopping on here and
no problem,
questions.
brother. Anytime.
Anybody have any questions for Kerwin before we call it a session? Anybody want to? Hey, he's got a YouTube channel. He's got his own group too. You want to plug your YouTube or your group? I don't.
Nah, that's fine. They can Google it. I just came here, to promote my thing,
Yeah, no, but it's still cool if people want to learn and they want to, they want to pick your brain. Like Kerwin's. It's been very, very easy to get in contact with, very easy to talk to.
I've been streaming lately because a lot of people, especially from Asia, they're like, bro, I don't have, the money to, to pay for the whatever, for what you do. And, it's just giving back to the community. That's why I upload some videos on YouTube. Not everything because, the sauce, I'm not going to give the sauce for free, But no, most of the videos you're gonna find plenty of information. Even if you don't mind, can you pull up my YouTube in your thing?
Sure.
Can Can you pull up because I want you guys to, if you guys want, right, you can go and watch. There's not the last video. I have a video based off
It's
kilos.
Kerwin's trading floor, right?
Yeah, Kerwin's trading floor. It's a video talking about the way that I use kilos, to trade a body of a candle closing below. If the momentum if the bearish pressure is there, you take the breakout. But that's a whole different topic. Go to the there's one. Okay, trading gold from certain kilos down below that one, the 25. Yeah, and if you can skip to the where I'm talking about don't feed the market around the 30 level. A little bit more. Don't make sense. You have to wait for a brand new setup. But in this case, mainly kilos for the ones that are being, kind of.
Basically, watch this video game if you want more understanding.
Yeah. You want to understand a little bit more about kilos. This is the way that I use kilos in Confluence, with other things, but mainly the body of a candle that close above or below a round number. Like the 45, like in this case, for example, the 45.
When did you record this?
It was like a long time ago, probably a year ago. It's at 23.50, so yeah, more than likely a year ago. Yeah, all these videos are recorded there in my Vimeo channel, but it's a private channel. Vimeo is only. But at some point, I'll be talking about. Yeah. At some point, I'll be talking about don't feed the market. When market is going to the 30, skip a lot more from there, probably almost to the end. I'll be saying don't be, at the 30. Maybe, yeah, when price is going to the 30, a little bit more, far from there, a little bit more forward. Yeah, when price is near to the 27, 30 level.
That's where you start explaining it?
Yeah, but more. Way from there, a little bit more, much more. It's probably almost at the end. Yeah, somewhere, right there probably. You see that price is already trading a little bit behind this. Yeah, can you rewind like 2 more minutes? 2-3 minutes, let's see. Right there. You have 25 pullback 27, so I can look for a possible move to the downside. And happens the same to the 30 level. Yeah, it's fine. Right there is fine. Below the 25, pullback 27, so I can look for a possible move to the downside. And happens the same at the 1830s, 1930s, 2030s. I'm telling you, these 30 levels are really dangerous, really aggressive in the way they behave pricing there. But you have something that you have to consider when you're trading near to the 30. Avoid holding position for longer because it's not fun. So this just a quick that video. 30. What is the kilo? What is, if you can go a little bit backward, like probably like 2 more minutes to the minute number 17, because I want you guys to understand something as well in that zone. And this is the CFD, right? More to the little bit more. Yeah, somewhere there. You can leave it there. Because the thing in here is that price for some reason, same thing that happened today on that 30 level that you have a 40, right? On futures is 40, but my level is 30. It creates so much contention. And I have a really, really hard time trading in that zone. Like near to the 30, I don't trust so easily.
Why?
And because the level itself, it's let's say you're trying to be a breakout trader. You don't see the level itself. You don't pay attention to what number is. Be careful because that 30 can hold price the same way that the 50 can hold, the same way that the 33 flat can hold. So it's insane the amount of contention that price can create there. Now, you won't wanna wanna see continuation. If let's say in this case you're trading to the downside, trade below the 27, your pullback will be the 30 or 33 maximum, and from there price is gonna continue driving down. Mm-hmm. Yeah. So always showing right now. Yeah. And the same thing happened today. On that 32, the thing is you have a 33.40 there, but for me it's a 33.30. Can be nasty. Really, really nasty.
Where were you
So,
looking for positions today? Hey, cancel which candle?
the candles, let me show the 5-minute candles there. I wanted to sell first. I wanted to sell below this candle, below that support candle low.
So
I
you're waiting
wanted
for these.
a bearish close, but really early in the session, before even before the news, with this kind of close, I wanted a pullback and the breakout.
But not
Apart from,
here. Not.
yes, there as well, but in this case, when that candle closed, even when this candle closing, I didn't want to consider it because I wanted to see when that mad volume started to kick in. I took a buy somewhere there. I took a buy expecting that this that heavy, beautiful support candle there. I told the guys, look, I hate to trade on that 30 there, but I know that this is a heavy volume. This candle here created the resistance, then this candle retested the resisting candle, and it's closing bullish. The body is really good. So I'm going to be breakout trader on top of this candle here. So literally, price pulled back a little bit. Prices start hesitating there. Give me a pullback, like 12 pips in pullback. I closed 50. I didn't like it. And price retested a little bit lower. Didn't stop me out. But then price push a little bit more. And I told the guys, look, I don't like this shit. I know that I'm dealing with that 30 there, and I'm going to call it a trade. I'm going to call it a day. I'm not going to feed the market anymore. Yeah. Because when market is that mad in volume and in decision, I hate to trade, gold. Because you can get in and you can get paid. But at the same time, in 1 minute, it's going to hit your stop, for no reason, 20, 30 pips. You look at the 1 minute candles, they're 30 pips in volume. Insane.
You didn't want to wait for closures and trade above this whole level?
Yes. Yeah. I want it. I literally, this 5-minute candle here, let me show you. This 5-minute candle right here.
Yeah, right there.
That body, that's my 4-hour candle London close. So anybody that break and a new candle that break is a good one to buy. Any candle that close and a candle that break is a good to buy. But nothing. Look at the fishy close that we had there. Look at, it's technically they're fighting with the 4-hour bodies, the lower times in there, and it's millimetrical. But I love this shit. I'm like going for surgery. I go and I see, oh, okay, that's the close. What I need a bullish close, pull back and break out, and I go in because I know that from this high over here, I have 50 to 75 or 100 pips to the upside. Nothing.
So if this red candle here flips bullish, you're in here on the break of the highs.
Exactly. Easy as that. Especially if that 5-minute candle pull back in the first 1 minute, mainly respecting the low of this one and breaking the high. That's my entry. It's an A+ setup. It's A+ setup. The other one, this candle here, you see that fishy body there? It's not closing technically healthy above this body there.
Yeah.
You're still dealing with that. So nothing. The candle that close, this one is your good close, but the breakout never happened. Apart from that, no fucking body managed to close above that freaking 4 hour. If later on, who knows? Look where market is right now, near to that breakout zone again to this area here. So imagine if prices creating that close inside, then this zone over here becomes another support, and then that's your pullback, and price will deliver overnight, having a close above this area here. Something about that body of the candle there, 50 to 75 pips north from that candle.
Wow.
It's insane. But that's the way these fucking algorithms behave. And you can go back in time, let's say, to all the previous sessions on 4 hours from London. And all you have to do is that where the high of the 4-hour candle is, like this one, for example, this is your 4-hour candle high, that red candle, and where the low of the 4-hour candle is, this one. Body below, pull back and break out, go for it, 50, 75. What is the next candle? This one. If you go below that area, 50, 75, and 100 pips as well. But this one today, from here, delivered 90, 96, 97 on my terminal. Didn't manage to deliver the 100 pips. But it's something. You don't need to be worried being a breakout trader, when you have more information. Yeah. To the low of this zone is 90+ pips. Easy.
You're really zooming in to recognize volume and minimize your risk there. Down to the 5, down to the 1, and then which 1 minute of the 5-minute candle
Yeah.
Really
And for me
helps.
to change my bias, bro, like literally for me change my bias is it needs to show me something healthy. Like today, that huge news candle, it was like, oh shit. So now we have healthy bullish volume.
Bullish volume.
Out of out of the blue, the candle is closing strong, and out of the blue, the candle is showing resistance. So what's my best bet? Wait for a new support and try to be breakout trader on top of that support. Maybe you can replicate the same volume here, 40 pips in the to the upside. But the kill itself is a nasty level, and you can get in. And if you don't like it, as long as the stop loss is not getting hit entirely, you can always manage the position there.
Yeah, once it flips bearish.
Yeah. So, but this is it's insane. It's insane. Now look at this. Look at this close right here. This is gonna be only two things will happen on that candle there. It's already closing on top of that support from 4-hour candle low. Now the only option is to retest this low here and bounce from there. What is the pullback that makes sense? Oh, the timing is the 25. So she's more than likely gonna pull back like 2 minutes instead of 3 instead of 1.
We've been seeing that too. That like the last 2 minutes of every candle, market is really pushed.
Yeah.
Like it would wait for the last 2 minutes, range, and then in the last 2 minutes you'll get the push.
Yeah. When you have enough momentum in the market, this candle, for example, reading 9 seconds, right? What you're gonna have it there, if this volume is real and it's not just a soccer candle that is gonna induce people or hit the stop losses in that zone to then close bearish, what you're gonna have here is that 1 minute create a resistance and the second 1 minute break the high.
Break the high. Yeah.
Go for the high, free that volume, and then boom to the upside.
And your stop is on this 1 minute.
And that 1 minute, correct.
That first.
Yeah. In this case, the 30-minute candle is about to open, so you have the more chances that the 30-minute candle can do a deeper pullback than a plain and simple 1 minute.
Yeah.
But if the move is there, that 1 minute is gonna need to hold the entire thing. Where do you have the key level? This is the 20.
The 30 basically, right?
This is the 30, so this is the 20. So more than likely, your maximum pullback can be the 20 pips below the key level, which is roughly this breakout zone. From there, you know, if price pull back, that's perfectly fine. The idea is that she's gonna continue pushing, and that's all you need. You know, momentum in the market. And when they free that kind of volume, it's gonna be a quickie.
Oh, I'll take 30, 40 pips. 7-pip stop.
Yeah, you can do it. I mean, that's not a problem.
You also want to be in a high volume time. You don't want it to be like 11:30 London close now. And like, but if this is happening, NYC Open or
the one that can mess it up in here is because the 30-minute candles tend to be more aggressive in pullback than a 5, a 15. But apart from that, nothing, man. The move is there. If the momentum is there, a 1 minute candle will tell the story there.
Interesting. So cool. Man, I want to thank you for showing up today. I really appreciate it. This was amazing. This is incredibly valuable. I don't know to the people in the chat. I'm sure people found it valuable. They had to have. I find this incredibly valuable. I find listening to other traders' perspective just invaluable. You can't replace somebody's perspective, right?
I mean,
you can't replace 10 years on the charts. So, you know, someone showing you what they've seen over the last decade in the charts. Have you noticed a big shift a big change between Biden and Trump in terms of how we print? Or the pullbacks
definitely.
Or how levels hold?
Yeah, the levels still holding the same, but the aggressiveness in the market is insane. Like back in the days, you were used to, use 15, 20 pips in a stop loss. Now you need to risk 20 to 30, and sometimes being wiped out in 1 minute. So the amount of volatility now is crazy. And on top of that is that Trump is saying, tariffs here. Oh, this too late Powell is not doing anything. So then what? Market react to that shit. In any war news nowadays,
he can't stand when someone's bigger news than him on the day. Like if something's bigger news, he pops out and he'll tweet or he'll go on TV and he'll be the bigger news. He'll be the news of the day. Powell comes out, doesn't drop rates. This guy comes out within the first 2 minutes and does a speech while Powell's still on.
It's like that. It's insane, but and you gotta be used to it. That kind of, in total honesty, it's more like market manipulation, bro.
Well, when I started trading and I heard you for the first time on Raja's stream, it was Trump time, but I wasn't profitable. I got profitable in Biden years.
Yeah.
And then now Trump's back. and the volatility is crazy. Like the pullbacks are steeper than the drives sometimes.
Yes.
It gets really funky.
Yeah,
So,
no, it really is. It really is. And market behavior change from time to time, and every market cycle is different. You need to have a proper approach. If you see the volatility is too much, but when you're gonna enter the risk to reward ratio don't make sense, then just plain and simple, let it go. Don't have FOMO. Sit on your hands. At some point, market's gonna chill a little bit, and will give you, a good risk to reward ratio. Even if you get in and get out and get paid like in 2 minutes. That's it. Take it as a big win because most people are losing their shit, in those behaviors. So you gotta appreciate that the market gave you some.
I'm telling you, like we closed partials today, and be like, damn, that was not 10 pips, 12 pips, but like you guys are winners today. A large majority of the market lost today.
Yeah,
you guys took money, off out of the market. Out of the charts, that's it. You're winners. Doesn't matter if you took $10 or $100. You walked away a winner today. All you got to do is just repeat that tomorrow. Be a winner tomorrow, and a winner after that, and then, you'll be a winner.
Mm-hmm.
And eventually you'll carry yourself like a winner too as you start winning. Right? Things change. You become a different person too as the confidence builds in other aspects of your life as you start winning and in here.
Yeah.
Oh man. Anyway, let's call it a session. Kerwin, I appreciate your time. I think we all appreciate your time. This is invaluable. You can't replace, like I said, the knowledge and perspective of somebody that's been doing it for a decade and coming in here and really just, giving the sauce for free. It's really appreciated. Thank you so much.